So there are concerns within the financial world that the risk of a global recession is still a non-zero possibility, thanks to a yet-to-be-settled trade war between the United States and China that was initiated by Donald Trump.
Just a few weeks ago, the U.S. and China were teetering on the brink of an all-out economic war. Tariffs were skyrocketing, global markets were in freefall, and panic was spreading fast. But now, President Trump walks out of Geneva with a stunning declaration, a complete reset in U.S.-China trade relations. So what happened behind the scenes, and what could be coming next? On May 12, 2025, the U.S. and China struck a surprising deal, a 90-day tariff reduction pact that slashes economic tensions, at least temporarily. American tariffs on Chinese goods were rolled back from 145% to 30%. While China lowered its tariffs on U.S. products from 125% to 10%. This breakthrough followed 2 intense days of talks in Geneva between U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng. President Trump hailed the agreement as a total reset of trade ties. Wall Street reacted quickly, with major indices climbing sharply. Still, experts warn that this may only be a short-term fix. Deep structural conflicts between the two powers remain unresolved. This conflict didn't begin with bullets, it began with tariffs. Back in 2018, Trump launched a fierce economic offensive, targeting China with sweeping tariffs worth billions. His reasons? He accused Beijing of technology theft, currency manipulation, and crippling American manufacturing. China didn't take it quietly. They hit back with tariffs of their own. And just like that, the world's 2 largest economies were caught in a full-blown trade war. The escalation was relentless. As tariffs piled on, the pain rippled through farms, factories, and tech firms. Prices surged, markets trembled. A Phase 1 deal was signed in 2020, but it barely scratched the surface of the real issues. By 2025, tariffs reached historic extremes: 145% on Chinese imports, 125% on American exports. This wasn't just a dispute anymore. It had turned into an economic Cold War. How did we go from cautious diplomacy to full-blown economic warfare? And now, with Trump's so-called reset in Geneva, is this a turning point or just a temporary truce? The stakes couldn't be higher. Geneva, a city known for diplomacy, neutrality, and now a global turning point. On May 11, 2025, U.S. and Chinese officials met behind closed doors in what many believed would be another dead-end discussion. But what emerged shocked the world. President Trump, flanked by Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer, entered the negotiation hall with sharp language and even sharper demands. Across the table sat Chinese Vice Premier He Lifeng, sent directly by President Xi Jinping. Their mission? Stop the bleeding before it became irreversible. Over 2 intense days, the delegations debated everything from semiconductor exports to agricultural subsidies and artificial intelligence restrictions. Tempers flared. At one point, talks nearly collapsed over intellectual property enforcement. But then, in a surprise late-night session, progress broke through. The result? A 90-day truce. The U.S. slashed its tariffs on Chinese goods from 145% to 30%. China, in turn, reduced its duties on American exports from 125% to 10%. Both nations agreed to immediately restart supply chain coordination, remove certain blacklists, and begin work on a long-term dispute resolution framework. Then came Trump's words, simple but seismic. This is not just a deal, it's a complete reset. The media scrambled, markets jumped, and for the first time in years, U.S.-China relations looked hopeful. But is this reset real, or just a temporary mask on a deeper conflict? The next 90 days will tell us everything. The announcement of a 90-day tariff truce between the U.S. and China.
Major breakthrough. We heard this morning from Treasury Secretary Scott Bessent and U.S. Trade Rep Jamieson Greer. After their meetings, there will be a 90-day pause on these tariffs. In that 90 days, they are going to be slashed dramatically.
During the Geneva talks sent shockwaves through global markets. Wall Street experienced a significant rally, with the Dow Jones Industrial Average soaring by 995 points and the S&P 500 climbing 2.9%. Technology stocks led the surge. Tesla's shares jumped 5.8%, Nvidia rose over 4%, and Meta Platforms gained 5.3%. Asian markets mirrored this optimism. Hong Kong's Hang Seng Index closed 3% higher, reflecting investor confidence in the de-escalation of trade tensions. In commodities, Brent crude oil prices increased by over 3%, surpassing $65 per barrel, while gold prices fell by 2.5% as investors moved away from safe haven assets. The U.S. dollar strengthened and Treasury yields rose, indicating reduced expectations for imminent Federal Reserve rate cuts. Analysts view this truce as a positive step, though caution that the agreement's 90-day duration means uncertainties remain. Overall, the markets responded enthusiastically to the temporary easing of trade tensions, with significant gains across equities, commodities, and currencies. However, the limited scope and duration of the agreement suggests that investors will remain vigilant for further developments in U.S. China trade relations. The recent Geneva agreement between the U.S. and China marks a significant shift in global trade dynamics. President Trump's declaration of a total reset in relations following the decision to reduce tariffs for 90 days has both domestic and international political ramifications. Domestically, this move is seen as a strategic effort to bolster economic confidence ahead of upcoming elections, appealing to both business communities and consumers affected by the trade war. Internationally, the agreement signals a potential thaw in the tense U.S.-China relationship, which could lead to more collaborative efforts on global issues. However, the temporary nature of the tariff reductions raises questions about the long-term stability of this reset. Political analysts suggest that while the agreement may ease immediate economic pressures, it does not address underlying issues such as intellectual property rights and market access, which have been central to the trade dispute. Moreover, the agreement's impact on other geopolitical relationships, particularly with allies who have been affected by the U.S.-China tensions, remains to be seen. The Geneva talks also highlight the importance of diplomacy and negotiation in resolving complex international disputes. The involvement of high-level officials from both countries underscores a mutual recognition of the need to manage economic interdependence carefully. As the 90-day period unfolds, the political landscape will be closely watched for signs of further cooperation or renewed tensions. The outcome will not only influence the U.S. and China's bilateral relations, but also set a precedent for how major powers navigate economic conflicts in an increasingly interconnected world. Despite the optimistic tone surrounding the recent U.S.-China trade talks in Geneva, skepticism looms over the durability and depth of the proclaimed total reset. While both nations have agreed to a 90-day tariff reduction, bringing U.S. tariffs on Chinese goods down from 145% to 30%, and China's tariffs on U.S. imports from 125% to 10%, experts caution that these measures may be more symbolic than substantive. Analysts point out that the agreement lacks detailed commitments on critical issues such as intellectual property rights, forced technology transfers, and the fentanyl crisis. Moreover, the temporary nature of the truce raises concerns about what will transpire once the 90-day period concludes. Gary Huffbauer of the Peterson Institute for International Economics expressed doubt about a return to normalcy in U.S.-China trade relations, suggesting that even with reduced tariffs, significant barriers remain. The political climate in both countries further complicates the situation. In the U.S., the upcoming elections could influence trade policy directions, while China's internal economic challenges may affect its willingness to make substantial concessions. Additionally, the lack of transparency in the negotiation process and the absence of a formal binding agreement contribute to the uncertainty. As the global economy watches closely, the question remains, is this reset a genuine step toward lasting resolution, or merely a pause in an ongoing strategic rivalry? The next few months will be critical in determining whether this truce can evolve into a comprehensive and enduring trade agreement. Despite the optimistic tone surrounding the recent U.S.-China trade talks in Geneva, skepticism looms over the durability and depth of the proclaimed total reset. While both nations have agreed to a 90-day tariff reduction, bringing U.S. tariffs on Chinese goods down from 145% to 30%, and China's tariffs on U.S. imports from 125% to 10%, experts caution that these measures may be more symbolic than substantive. Analysts point out that the agreement lacks detailed commitments on critical issues.
I'm happy to report that we've made substantial progress between the United States and China in these very important trade talks. First, I want to thank our Swiss host. The Swiss government has been very kind in providing us this wonderful venue.
The next few months will be critical in determining whether this truce can evolve into a comprehensive and enduring trade agreement. The Geneva breakthrough has shaken the ground beneath a long-frozen U.S. China standoff. For the first time in years, both sides stepped back from the edge and opened a 90-day window of opportunity. But make no mistake, this is no fairy tale ending. It's a test of political will, economic priorities, and global patience. If this reset holds, it could redefine the future of global trade. If it crumbles, we may be facing a bigger storm ahead. What comes next depends on more than negotiations. It depends on trust, timing, and whether two superpowers can truly rewrite their story. Do you believe this trade reset is a turning point or just a clever pause in an endless power game? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the bell, because the next twist in this global saga is already unfolding, and you won't want to miss it.